Hello everyone, greetings. So welcome to KYC for private investment and alternative investment vehicles. So we're talking hedge funds, private equity, VC, investment advisors, all sorts of private investment funds. I'm going to tell you how to do the KYC for that whole alternative investment ecosystem. It is getting big. So all these funds need KYC. They all have to have a financial crime compliance program now. So they've got to do the KYC client onboarding. My name is Carl. I'm glad you're here. Let's begin. Purpose of course. Okay, so there's a few reasons why you may want to take this course. I do believe that you'll get value from it either way, but one of the reasons I've done this course is that this is more professional education in that I want people to be able to do their own KYC CDD from this course. So there is a unique special way of how client onboarding is done right now through a lot of investment advisors, investment vehicles, the stuff I talked about previously. And more than ever, a lot of those investment vehicles now need to do KYC. So I think the last few years, a lot of regulators and some law enforcement, they focused a bit, not necessarily focused too much, but they've had their hands tied and sort of all over crypto because this crypto thing has just exploded. But it's becoming quite obvious in the past few months now, and this is early 2022, or nearly the summer of 2022, that they've kind of dropped the ball on alternative investments. So alternative investments over the past few years, they just haven't been doing the KYC, CDD, and like sanctions that you're seeing now, there's a massive uptick in opportunities to get into a hedge fund to do KYC, to get into a private equity firm to do client onboarding, to get into a VC to do financial crime. So this is geared towards that industry. So the two things here, like I stated, are if you're a smaller fund and you don't want to spend huge amounts of money on external vendors to do the KYC, and believe me, there are so many external vendors out there that will do all this stuff, all around the world. Not just I'm talking, the main big four consultancy firms, just all sorts of service providers, but it's expensive. And fund costs have gotten up more. So if you're a small fund, you don't necessarily need one of those big sort of consultancy groups to do it for you. So basically, I'm going to teach you how to do it yourself and how to communicate with the fund administrator that you have to do the KYC and to save a lot of money that you would usually spend on vendors in order to do that. So that's one of the main reasons here. This is very skills orientated and it will help people do the KYC themselves, or at the very least allow you to train someone else to do the KYC if you wish. Another issue as well, I mentioned this, is that this industry is getting bigger. So if you want the specific KYC skills as per hedge funds, private equity, alternative investments, this is how it's done. It is a bit different to banks. It's not as hard as working for a financial institution such as a bank or doing wholesale or any other sort of entity. It's not as hard, actually, believe it or not, but it is a bit different. And you do need to know some things about trusts, about high net worth individuals, about partnerships, about LLCs, and that's going to be in here as well. So you will gather the experience to go into an interview. If you can get that interview, if you want to message me, I'll give you some tips as well. I don't mind giving tips. Actually, I might do a video at the end. Give you some tips, and from that someone will look at you and go, okay, this person knows what they're talking about, etc. I don't need to train them that much, or training is minimal. That's great for me. Let's begin. So that's one of the big reasons as well. So there's two parts to this course. You can do your own KYC, and you can learn how to do KYC in the alternative investment space. So that's basically it. Let's begin. Contents. We're going to talk about the fund administrator and the role of the fund administrator. Then we're going to talk about individuals, including the onboarding of individuals and high net worth individuals. We're going to talk about trusts and the onboarding of trusts, partnerships and the onboarding of partnerships and limited partnerships, things like limited partnership agreements, that kind of thing. We're going to talk about limited liability companies as per the alternative investment industry. We're not going to talk about United Airlines, LLC, or anything like that. No, we're going to talk about limited liability company structures and how they're used to be with client onboarding for KYC and how they're used in the alternative investment industry. And then we're going to talk about the beneficial ownership rule with regards to alternative investments and client onboarding for alternative investments. It's quite specific. It's not as in-depth as just, say, a few other things, but some of the same rules still apply. And then we're going to talk about screening and sanction screening. So that is the contents. Okay, so I'm talking about the fund administrator here. If you work in alternative investments, you will know what a fund administrator is. But for people who are trying to maybe get in the industry, it's quite an important sort of thing to know about. Every investment fund should have a fund administrator. The role of the fund administrator at a macro level is to represent the interests of the investors, to make sure that investors, through a range of sort of business processes, aren't defrauded per se, and they do a lot of things. One of the major things that fund administrators have always done is they calculate net asset value. So they basically do the accurate measurement of how much the assets for the investment fund are worth. You can't rely on the investment advisor team telling you how much fund it's worth. They act as a neutral party per se. to sort of say how much the fund is actually worth. So they have accountants on their teams who do that kind of stuff. The fund administrator sort of process or model works in that if you're an investor and you invest in a hedge fund, the hedge fund pays a certain percentage, like maybe like 1%, that goes to the fund administrator. So the hedge fund has to pay for the fund administrator, but I guess those costs come off the investment team, or the investors coming anyway. They of course pay for those costs in theory anyway. Now the fund administrator does a lot of things. It does the net asset value calculation. It might do things like K1s, which is some tax forms, just little things like that. One of the things they now do is they process the KYC, client onboarding documents. So a lot of the time they can go get the documents, but that costs a lot of money and people don't want to do that. It's also not necessarily that effective. So the kind of current model is that the fund collects the KYC documents and they send them over to the fund administrator, who kind of work as, like, I guess you could say, a second level in the process, and they validate the documents and then they process the KYC. And in many cases now they'll do the screening and all that kind of stuff, sanction screening, etc., conduct a risk assessment, and you'll have a fully onboarded KYC client. But if you're coming in as a fund and you're doing the KYC for your fund, you still need to collect the documents yourself. So that's the role the fund administrator does in KYC client onboarding. So it's good to know what it is. But a lot of you are probably here because you don't want to pay the fund administrator fees to do the KYC for you. So you need to collect the documents and then you send it across to the fund administrator and they process the KYC. That is currently the model with regards to client onboarding with alternative investments right now. Okay, let's begin. Okay, individuals. You're going to get a lot of individuals who are going to want to subscribe to a fund, essentially. This operates under the highest tax bracket, but a lot of people just want to sort of come on board individually because it's just easier. There's multiple reasons. So the KYC process in general for an individual is much easier, but you do need some pretty sensitive information. So a huge part of this role is trying to get that sensitive information. So you're kind of in a balance between they want to invest in the fund and they really want to do it fast, and they don't. These are people who are pretty busy and important, so you don't want to have to like annoy them, but you have to ask for some pretty important information, and no one likes giving up that information. I don't like, showing a. In many cases, this is done over email as well. It's not done under a secure data portal, so I don't really like giving someone access to my passport photo or anything like that. So this is something that you're going to have to do, and this is when the customer service component of being a client onboarding analyst, with a hedge fund or with a private equity fund, is so important. You can't just be like you are at a bank and just saying, hey, give me this, or you need to do this, or we can't do this. No, you have to really, really be nice, write emails extremely well, be extremely clear, but extremely nice, but also forceful to what you need to make this work. Okay, so individual comes on board, they're going to provide a few things. The first thing they're going to need is a photo ID. All right, so the photo ID can either be a passport or if you're in North America, a driver's license or a national ID card. The photo ID needs to be certified or in some cases notarized. Now, notarized is technically, sometimes it needs to be notarized, but I've never seen that, but it is a thing. Notarized is when you go to a notary and they assess the document, they look at it, and they stamp it for approval. But it needs to be certified. So certified will mean someone else will look at the photo and they will sign it with their name, the date, and their signature. That usually, you can't actually do that with the actual photo ID. So you actually scan the photo ID onto an A4 piece of paper, you print out the A4 piece of paper, then the person certifies it by putting their name, signature, and the date, and then you rescan that, and that is a good example of a acceptable form of photo ID for the KYC process. Then you need proof of bank account. This is usually just a bank statement. You need three things from this. You need the name of the account holder. So if it's individual in this case, let's just say the individual's name is John Smith, the bank statement has to be in the name of John Smith. All right. For other things, we have trusts, entities, and partnerships. If we're onboarding one of those entities, well, then the bank statement needs to be in the name of that entity. So it has to be in the name of the client, the legal name. All right. And then from there, you have the account number. So you have the legal name, the account number, so that's just an account number, and then you have an address, and that address has to match the next bit, which is the proof of address. So it's another address verification. In some cases, you can use a driver's license as a proof of address verification, but it's best just to use these two here. So that is the proof of bank account. Now, some people who are high net worth individuals, they may not want to provide this information because it gives up pretty personal information. You can allow the client to redact certain things. So you can be like, hey, I need this proof of bank account. They'll go, okay. You can redact most things except you cannot redact your legal name, you cannot redact your address, and you cannot redact the banking company or the bank or the branch, and you cannot redact the account number. Okay. Next, you need a proof of address, which is basically just a utility bill, phone bill, etc. I see the water bill a lot, if I'm being honest. A lot of, even in the US, property tax is a good one. It's just the same thing as a proof of bank account, but it's on a different entity, and it doesn't have an account number, but it has your legal name, and it needs to be in the legal name of the client, whether it be an individual, trust, limited partnership, LLC, etc., and it needs to have the address. Okay, so that's all you need. And then you need a tax form, which is either a W-9 or a W-8, depending where you are, or a social security number. So a W-9 is for people who are in the United States, citizens or residents of the US. A W-8 is for people who are not in the United States or residents of the US or citizens of the US potentially, but they are investing in a US product per se. If you are a on-the-board resident in the US, living in the US, you can use a social security number in many cases. But most people who live in the US, if they're investing in an on-board Delaware fund, which we'll go into a bit later, they're likely to use a W-9. With a lot of these funds, they'll be domiciled in Cayman, so the W-8 will be used for the Cayman fund. Okay. In some cases as well, if you're domestic on the ground, like I said, you can just use your social security number, but you also will need to show proof that you have a social security number card, so you may need to provide the number and actually provide a PDF of the social security number card. Okay, so that is the general onboarding procedure for individuals. Okay, so here is the identification for the individuals that are required for onboarding. So the best one you can get is a passport here. So there's a few things you need to look for. Now the most important thing sort of right off the bat is that there's a date of expiration here. So the ID has to be active. It cannot be expired. The ID is ID expired in any capacity, well then it is invalid. You cannot use it. You have to use an active one. Another bit of information you might need is a signature example, but not really too common, but also a place of birth. So this person here, Jane Citizen, was born in Melbourne. So you might need that information down the track. In terms of a national ID card, this is obviously a European Union Finland one. Same thing, this can be used as a federal sort of ID. It might have like a tax number potential. I don't think this one does, but you might have a tax number. Or some sort of number, so you may need to provide that information. Another example here is a North American driver's license, or depending on the country. So this will only work really if your client is in North America. So then you can use the North American driver's license. If the client is outside of North America, well, then you might need to use a passport. Depends on the rules and regulations. But for instance, here we could just use this Alberta driver's license. It's active, so it could be issued 2018. They usually last for 10 years, but it has an address here. Okay, that's what you want. This ID is federal, so it's not going to have an address, but this here has an address. In some cases, you may actually need to provide information such as like an ID number. So here you have a passport number. Here you have a sort of Finland European Union number, and then here you have an Alberta driver's license number. So you want the ID with the photo ID. It needs to be active. You may need information regarding the place of where they were born, because sometimes that's asked, but you also, if you can get a ID number and an address sometimes. So that is the IDs for individuals. Okay, proof of account. I really don't like using this bank statement, as I've seen it a few times on the internet. I really should redact a better one, but it has everything we need here. So whenever you want a proof of account, like I said above, you want a legal name, a bank account number, and an address. So as you can see here, it's a proper letterhead of the bank. So in this case, the First Bank of Wiki, we have, which has an address, so it's a literal bank. We have the name of the individual here, so this is their address, John Jones in Dundas Street in downtown Toronto. Ooh, we must be a bit of a wealthy boy to live there. Okay, it doesn't matter. Account number, this here, so that's the account number, the address, and the legal name, and then everything here points to it being a legitimate account. So you can tell from this that this bank, the First Bank of Wiki, has done their own KYC due diligence on John Jones here. So that obviously is a good indicator that he is a verified person, he exists. And as you can see here, he has got all sorts of transactions, so he exists. He has an address, they would have had to verify the address, and he has an account number. So, yep, that is proof of account. Okay, so proof of residence, or sometimes known as proof of address, it's just a utility bill. As I stated before, it's just a utility bill which is obviously provides name and address and just verifies the proof of account and verifies the person. So you'd have the legal name here for the individual or the company, in this case the company name, so ABC Company, or maybe the individual such as John Smith, and then you would have their address. You know that's a real bill because it's from a major company like Verizon. There's an actual bill. It exists. So that is basically in a nutshell proof of residence, proof of address. Just the bank statement, but an official document, but without the bank account, essentially. Another entity, utility, mobile phone bill. gas bill, water bill. They're usually the best. Okay, so tax form. So if you're an individual, you need some sort of tax form, especially within the US. This applies to other countries as well, where the tax system is a bit more sort of straightforward. So you might just need like a tax ID or something. But in the US, you need a couple of documents. You need usually, if the client is on board, a US citizen or a US resident, and the product is essentially a US type product. So let's just use an example, like a Delaware hedge fund or something. You would have like a W-9. And so I'll go through that in one of the videos ahead. If the investor is overseas, but they are not a US resident, whether it be a client or an entity, you would use a W8. So you have the W8 BEN here, and then for the entity, you have the W8 BEN-E. In some cases, well, you could just use a social security number. In many cases with KYC, in terms of verifying individual, you always might need a social security number. You may not need the actual photo here, but you might need the actual number to be provided. Those things are asked, especially so. A lot of it comes down to CRS, which we'll go into later, which is a major thing you have to do. So you do need a tax form, some sort of tax identification. The type of form that's used depends on where the person is and what resident they are, or what nationality, what country resident they are and nationality. And if they're in the US, you should better just use a social security number, or at best a W-9. In terms of a trust, like a trust might need a W-9. LLC will definitely need a W-9, or it depends on what it is abroad. So that is the tax forms. Okay, a quick overview of the W-9 for KYC. So first thing, Form W-9, you need the right revision, which is October 2018. There's another one from 2014 that is invalid. You cannot use that. You have the name here as shown on the income tax return. So the name is listed here. If you have a different business name, or what is commonly known in America as a DBA, you might put this here as well if it's different above. But usually, whether the individual or entity or trust, you can put it all in here. Just put the name there. Then from here, you select what sort of type it is. So if it's individual, corporation, S corp, partnership, trust, estate, or a single or a limited liability company. Okay, you put it there. Obviously, you don't really need to do this stuff here probably too much, because no one's going to be exempt from FATCA reporting, if any. Then you have the address. Then you have the city and zip code. You don't really need anything here. You might need to put address here. Then you go down to part 1, which is probably one of the most important parts. So if it's individual, they'll have their, or even sometimes a trust, they'll have their social security number put in here. If it's an entity, well, then they'll have their TIN number or their EIN number, which is 2 digits, then a dash, then the other digits here. I think it's 1, 2, 3, 4, 5, 6, 7. Yep, so it's 9 digits total. And then obviously this has to be certified and signed. Sign here, signature of the US person, and then the date. Now, very, very important. It is not, this W-9 is not accurate or valid unless it's signed. So a lot of the time people will send the W-9, like, oh, here's the W-9, they filled it out, but it's not signed or dated. So you have to, in that case, you have to send it back and go, no, sorry, you need to sign this, you need to date this. And it has to be wet signed. It can't just be written in there. It can be docu-signed, but it needs to be signed or it doesn't work. So that is the W-9 in a nutshell with regards to alternative investments, KYC. All right, so the W8 BEN, you fill this out if you are investing in one of the asset classes we talked about, but you are an individual who is not necessarily, well, lives overseas, okay? So obviously there's a separate form here which is called a W8 BEN-E. That's for an entity. So this is for an individual. So if you're an individual, it has to be the W8 BEN. So if you are not a US citizen or a US resident, including resident alien individual, you have to use a W9. So entity here is N, US individual resident is a W9. These ones here, don't worry about them too much, not that important. So if you are investing in a US entity and you live in Hong Kong and you are a Hong Kong resident and they ask for a tax file number or any tax document, this is what you provide, okay? So it basically goes straight to the point where identification of a beneficial owner. So name of the individual, country of citizenship, permanent residence, make sure the city and town, country, mailing address if different from above, don't worry about that. Okay, so if you have a US taxpayer identification number, such as an SSN or an ITIN, then you'd put that there. A foreign tax identification number, so people who are investing into US stuff abroad will usually have this, a foreign tax identification number. It's sort of similar to a TIN. You would put that in, you wouldn't worry about this, and then you have your date of birth. Sometimes you might have to do this stuff, claim of tax treaty benefits. So you would certify that you're a resident of this country. If it has a treaty between that and the United States, some countries do. Special rates and conditions. This is not really applicable too much because if you're a beneficial owner, you're usually not claiming provisions of article and paragraph this and treaty line number. It does need to be certified sometimes. So, certified every time. So you have to tick this box here. Or if you're another person, or if you're the actual person, you can sign this here. So it has to be signed and dated. It does not count if it's not signed and dated. All right. So there's a few other things attached to the form, but that's not really important. Make sure that you always have the updated revision, which is down here, which is the October 2021. I think the other one might have been 2018. If you have one that, it does not count. It has to be the latest revision. Users always check this up here. So that is a W8 Benny. So if you are a foreign individual and you're investing in a US private investment vehicle, even as an individual, you would use this one here. All right. Okay, W8 Benny E. So this is the entity version. So if you are an entity that is not based in the US, then you need to use the W8 Benny as a tax form here. Remember, revision October 2021. It is not valid if it's not on this revision date. So kind of same as before, it's just the entity instead of the individual. Name of the organization, that is the beneficial owner. So you need to do the name that's the beneficial owner. Country of incorporation. Name of disregarded entity receiving the payment if applicable. See instructions. Okay, I don't think I've seen that before, but then you go to number 4 here. So this is where you do the entity type. So simple trust. Usually with alternatives you might have a simple trust, corporation, partnership, complex trust if you want to type. If you're really in certain funds, you might be having foreign governments, but private foundation, that can technically be something as well you might have. So you just type the legal type here inside here. For various FATCA stuff, depending on what what company you're with or whatever, what you're onboarding as, then you may need to type this one here. But for individuals, trusts, let's just say partnerships, and even most LLCs, you won't need to do that. This is more towards foreign financial institutions, as you can see, FFI here, and then a few other things as well. So that won't apply too much for us here. So you'll be able to put account that is not a financial account. Okay. So as you can see here, this is very much related towards financial businesses. Address, permanent residence, city. If a mailing address is different, which abroad it might happen more with an entity. So you might have a mailing address, which is kind of like the, I guess you could say like the registered address, and this is kind of like the primary business address. So you might need to do that properly. Let's go down here. If you want to do more beneficial ownership stuff, there's a few more things here. If it has a US TIN number, you put the TIN here. The GIN number, if you have a foreign TIN, you need to put here. I've never seen this tick before. This is all for a foreign financial institution, so for what we're doing under the FATCA purpose, it's not really important. If there's any tax treaty benefits, now this does happen every now and then. There are some tax treaty benefits, but this is more accountant stuff. You have to be a pretty qualified accountant to know this kind of stuff. A few other things here, not really too much. Obviously, you might know more about this than me, if I'm being honest, but that's not the issue in terms of client onboarding KYC. But this is very important here. Sign it, print name, date, that makes it valid. So that is the W8 Benny for what we're doing. Okay, so the next vehicle we're going to onboard is trusts. This is very US-centric. So trusts are used a lot with private investments. A lot of Americans, especially high net worth individuals, like to keep their money in trusts. First, it's quite tax efficient. But also, secondly, and one of the sort of main reasons that's not talked about is trusts sort of set the rules for how generational wealth is allocated. So, especially a lot of people who come from a lot of money and are successful, they might have significant egos. So it's very important that there's sort of rules as to how that family money is allocated, who gets it. And the whole idea of a trust, as you guys know, is basically an independent person sort of monitors the investment for everyone, a trustee per se. So very popular in America. They do a lot of investing in private markets. But the big document you need first up is the certified copy of a trust deed or declaration or any primary document in which the sort of rules of the trust are set out, because a lot of the information you're going to find is going to be in that sort of document. So you're going to find out who are the trustees, who are the settlers, who are the beneficiaries. All that kind of stuff is going to be in basically the primary trust document. So you will need a certified copy of a structure chart of the trust. A lot of trusts have sort of complex ownership structures, and it's best a lot of the time, especially if there's LLCs involved and other things, other vehicles involved, that you have basically a structure chart or an organizational chart. It's common with a lot of LLCs and a few other sort of entities like that, but it sort of provides the overall view of how the trust is, and basically helps you sort of find out who, who requires beneficial ownership type attention. Second, so the other thing is you need identification information for the trustees, settlers, protector, enforcer, beneficiaries, with effects or vested interests, so all of them. Now, all the information will be in the primary trust document. So like, I guess you could say a beneficial owner or an individual, you have to provide the ID for the individuals involved. Now, you don't have to get a tax information, but you have to do a primary ID, as we discussed above, a primary ID proof of account, and proof of residence. Now, I've written proof of residence and proof of account here. That's not the same thing though. So the proof of residence and the proof of account documents plus the primary ID are for all the people who are identified within the trust, or the settlers, the trustees, protector, beneficiaries, everyone. Okay. Now, you still need a proof of residence or a proof of account for the trust itself. All right, so the trust is going to have its own bank account. The trust is going to have its own sort of residence document. In most cases, you can use both. You can use a proof of account, sorry, to sort of operate as both these two elements here. But you need one for the trust, and then you need the stuff also for the individuals with the trust. Then you need a certified copy or authorized signature list, including all individuals authorized to act on the subscriber's behalf in relation to the investment, together with specific signatures. So you need to do signatures or a list of signatures of people who can operate within the trust. So that's another document that verifies the existence of a trust. That's basically it in terms of trusts. You need the primary trust document. All the information is in the trust deed or declaration in that document, but then all that document sort of dictates where you go next with regards to the trust. All right, next bit is partnerships or limited partners, depending on the entity. Similar sort of stuff you need, but like the trust, you need a certified copy of registration or establishment or equivalent. So you actually need a certified copy, sort of a certificate that the limited partnership is an entity, has been created. So you'll need to get a copy of that. Then you'll need to get a certified copy of the LPA, Limited Partnership Agreement, or the Partnership Agreement. Now, through that Partnership Agreement, you'll be able to go through it and find out who really you should be doing KYC on from an individual point of view. So if the partnership agreement has 4 partners in there and they both own 25% of the partnership, or however it's laid out, well, then you're going to have to do the limited partnership KYC on the limited partners. So that means you'd have to collect an ID, collect a proof of account, collect a proof of residence on each one of those humans, well, a natural person inside the limited partnership agreement. You definitely need a certified copy of an authorized signature list. This could be specimen signatures, but usually these entities have sort of a signature list. Authorized signers are people who are authorized to sign on behalf of the partnership. It could be just the partners, it could be someone else, it could be an account, it could be all sorts of stuff, but this is something you need to have because it legitimizes the partnership. It sort of proves that it's much more of a serious entity. It's not a shell company. A lot of this stuff is designed to basically show that it's not like a shell company or a shell or something that's sort of acting to obscure ownership, essentially. Then you'll need a certified copy of an ownership or organizational chart. Now, sometimes you can get away with this. You can just provide a PowerPoint sort of organizational structure, sort of like a, just shows how it's all laid out. But the reality is that if that organizational ownership structure has other entities involved in it, you're going to have to do KYC on those. So that's why you need this, So you might have just to give you an idea, you might have a partnership as your client and you have to do KYC on them, but you might end up doing KYC on a couple other entities, and then you do KYC on 4 or 5 individuals, and that's all related to just doing the KYC on one partnership entity, just to give you an idea. You'll definitely need identification information on the general partner or equivalent or any other natural person exercising effective control over the management of the partnership. It's best to do everyone basically if you can, unless there's like just so many partners, it's not impossible, but effectively you have to do whoever has effective control. So this is basically the control prong beneficial ownership that we've been talking about, or we will talk about. So whoever controls the partnership needs to have KYC, but anyone who really has any sort of say in the partnership should have KYC done on them. And then you need proof of account and proof of residence. Now, this can't be for an individual or a limited partner or anyone else. It has to be in the name of the partnership. So if the partnership is, I don't know, Johnson LPA, then the proof of account, proof of residence has to be in Johnson Limited Partnership. Okay, so that's how you onboard partnerships. Okay, so limited liability companies, LLCs. Let's begin. A very popular way of investing in private investment vehicles is through your own LLC. A lot of people do this. I don't, but a lot of people do. It's probably the most tax efficient way, depending on your personal circumstances. But most LLCs are actually domiciled out of Delaware, which is has the least corporate tax out of any state in America. So it's quite a popular way. Now, it does require a lot of KYC because much of the money laundering and hiding of masking the true beneficial ownership is basically through multiple LLCs owning each other, and then that's why you have to find the ultimate beneficial ownership. So there is a bit of work with regards to having to do KYC on limited liability companies, but I'm going to show you right now how to do it. You need a certified copy of incorporation. So if it's Delaware, that does not mean you go to the Delaware Secretary of State website or any Secretary of State website and print that out, copy it. You need all that information. No, you need to get a copy of that, a certified copy. So the original copy, no, but you need a PDF screen of the original copy. So you need that, and in some cases you might need a printout as well. A PDF printout of the I guess you could say the Secretary of State website, to verify the certified copy, depending. That may be asked. You'll need a certified copy of a constitutional document, such as memorandum of association, articles of association, etc. You need to go to that document, have a look at it, see if there's any companies that may own this company. They will be in there, and you may have to do KYC on those companies, especially if they own 10% or more. So this is like, it goes back to limited partnership. You might be onboarding one company here, let's just call it, I don't know, King Enterprises. But you might end up, as part of onboarding King Enterprises, you end up onboarding 5 or 6 other companies. So you can see how KYC here works now. So you need to get a certified copy of a register of directors or senior managing officers or equivalent. These LLCs are required to have that document, so you need to get a certified copy of that. You need a certified copy of authorized signatory list, including all individuals who are authorized to act on the subscriber's behalf in relation to its investment, together with specimen signatures. That just means it needs to be signed. So the authorized signature list basically is a document that just says, yep, this is who's authorized to sign on behalf of the company, name, and then has the signature of that person, etc. You need a certified copy or a register of voting shares. That's more just a document that sort of sets out the voting things. Not for every LLC, because some of them aren't that big and don't do that as much. But if it's big enough, then yeah, you'll need a copy of that, because it could prove, the beneficial ownership structure, etc. You need a certified copy of the ownership or organizational chart. So which company the LLC is owned by another LLC, which is owned by another LLC, which is owned by a natural person, all the way up to the ultimate beneficial owner. You will need a certified copy of that. And if any one of those in the chain owns more than 10% or more, you've got to do KYC on them as well. Ask for everything here, especially if it's LLC or individual or whatever, you've got to ask for everything again. And finally, you need identification information on 2 directors or equivalent senior managing officers and any other natural person exercising ultimate effective control over the management of the company. So eventually you need the primary ID, so passport, proof of account, bank statement, proof of residence, utility bill on each person that's deemed to be equivalent senior managing officer or equivalent director or any other natural person that exercises control over the company. So the control prong within the ultimate beneficial ownership sort of structure. So that's what you need for limited liability companies, a bit more than the other stuff. And in terms of private investments, it's one of the more common ways that you will be onboarding. Okay, so beneficial ownership. I really want to keep this simple because this course is directed more towards a specific thing. Beneficial ownership is complex, especially because KYC is complex because there's just so much KYC you have to do on so many different products that are just, some are small, some are big, it's not that straightforward. So I want to keep it related to what I'm talking about here. But the general rule of beneficial ownership and the FinCEN beneficial ownership rule with regards to private investments, alternative investments, etc., is any natural person who is deemed to have control, own, or involved in 10% or more of any of the entities in the ownership chain should be onboarded. So that means if you have company A, and then company A is 60% owned by company X, 30% owned by company Y, and then 9% owned by company Z, then company X and company Y should be onboarded, do their own KYC. And then with company Y, there is a natural person who owns 50% of company Y. They need to be onboarded as well as an individual. So a lot of the time, as you can see with, I guess, a lot of these sort of cases, is that you might get the opportunity to onboard, let's just say one person, but you end up onboarding, you just say you onboard an entity per se, but you end up onboarding 4 or 5 people associated, and maybe 3 or 4 other entities associated with that entity. So that's why KYC gets a bit complicated. You think it's easy, like, I just want to get these documents and send them off. Yes, but then you also might have to do it like 5 or 6 other times for the one client. So that's basically the general rule. So anything that owns, whether it be individual, entity, that owns 10% more of your entity, all the way up through the chain to the ultimate beneficial owner, who, by the way, has to be a natural person in the end, unless the entity is exempt, but that's something else. I don't want to talk about that right now. But it has to be a natural person who becomes the ultimate beneficial owner. That's who you have to onboard. So you need all documents with regards to that. Any individual in that chain, then you need to get a primary ID, proof of residence, proof of account, all that kind of stuff. There is no control prong here per se, unless it's a senior manager. So if it's a senior manager, as I talked about LLCs, even if it's a small company, they might have a senior manager or directors. There might be a lot of people who own less than 10% of the entity, but that doesn't mean you can get away with not onboarding someone or not getting photo ID. So they might have a management team or a board of directors, and then you'd have to get the I guess you could say the photo IDs of the board of directors and the senior management. Okay, so that in a nutshell is beneficial ownership for private investments, alternative investments, etc. Okay, so next one I want to talk about is the next stage after you've got everything, which is name screening. Now, most of the time you'll have a fund administrator who will do this for you, or an accountant who will do this for you, or someone else is working with you to get the documents. They will do this for you. But you might have to do this by yourself. You will have to get a vendor to do this. Now, if you're really low level, I don't mean in a mean way, but if you're really a small company, like a tiny company, and you're doing KYC, sometimes a Google search is actually okay. I know this sounds crazy, but I've actually done KYC with a Google search. It's not as common anymore. You really need to purchase a vendor if you're going to do it by yourself. One of the main vendors like Thomson Reuters or LexisNexis or a lot of these AML packages, they do it themselves now. So you need to purchase a vendor if you're going to do it yourself, which can be costly. It's basically a database which has a bunch of criminal convictions, negative news around the world. But then basically you have a few things, but the main thing is you have is either a true match or a false match. So if you type in a name of someone, so you usually just screen everyone that's involved in the LLC for something, what we're doing in terms of individuals, limited partnerships, which are called trusts, LLCs. At this level, every name you see in there, which is not going to be much, usually would need to be screened, and you're either going to have a true match or a false match. So a true match means that you've screened a name and negative news comes up, and you've obviously correlated that maybe because of the location, because of the age, and a few things. It just matches. A true match means that this is the person. So you're onboarding someone, and then a negative news article comes up that this person was involved in a $10 million money laundering scheme, which, believe it or not, it does happen. I've found true matches a couple times before. Then you know the client you're onboarding is a criminal. And then you might be going, we can't really onboard this client anymore. They've been in trouble for this. This is reputational risk. Okay, so that's how basically what the whole idea of name screening is trying to do. They have a list of negative news. You put a name in, they search it, the algorithm, comes up. Then you obviously know, oh, this person's bad news, we can't onboard. False match is when you get a person who you've typed for your name in, and then they get a true hit, but it's a false match. So it's like, just say I type in, John Johnson again, and I get a match for John Johnson. But this John Johnson is in Norway, and then the John Johnson I'm onboarding is in, Namibia, anywhere, you know what I mean? We know that for various reasons we can discount that it's not the same person. So that becomes a false match, all right? And you write a little blurb each time as to what you're doing. So you would say, false match, John Johnson is based out of Namibia, our client. This John Johnson is a different individual at a different age who went to school at this school, because it will be listed on the hit, and it's based out of Norway. So you'll know. So, but if you want to do it yourself, it does cost money, but you need to get one of these packages, Thomson Reuters, LexisNexis. But in many cases, you'll be dealing with a fund administrator who will do this for you anyway. Okay, sanctions. Sanctions checks are hot right now thanks to the war in Russia. Everyone is going back into sanctions and looking at their sanctions programs and making sure everything's up to date. So it is important to do a sanctions check. Now, if you have a vendor for negative news, they have a sanctions check as well. So if you have the vendor such as Thomson Reuters or LexisNexis or WorldCheck or anything like that, you don't need to do what I'm trying to show you because it's automatically there. But OFAC basically makes the sanctions algorithm for checking available. So there's no excuse to onboard clients in the US who are potentially on a sanctions list. So I want to show you how to do it in a second. But in this day and age, it's so important to do that. So it's OFAC sanctions check list. Here we go. This is what we want, sanctions search. Okay, so this is it here. They have an algorithm. It's all here. So let's just say you can search everything here if you want to be specific, but it's just not that important. You just want to do a check. So let's just say you've got a hedge fund and Kim Jong-un from North Korea is a private investor and he wants to invest 50 million into your fund. So let's do a sanctions check. He may not come up on a negative news check, but he's going to come up. So Kim Jong-un. We have a match. So a match. Let's have a look here. Just say Kim Jong-un, is an investor from Korea or North Korea. Here we go. So you can see here, confirmed hit, individual, title, date of birth, the type of list that he's on, the program, which is the DPKR3 program, identifications. So if you had a client who was investing 50 million into your hedge fund, and his name was Kim Jong-un from North Korea, you would know him, right? This is a true match. So you probably would not be able to onboard him because you'd be violating OFAC sanctions. All right. So I'm just using that as an example. Let's do another one. Just say you've got a client called, Chris Johnson. Actually, I think we're going to go back one more. Here we go. That's what we want. Chris Johnson. Actually, we'll go back and do it again. Here we go. That's better. Name, Chris Johnson. Search. 0 results. So if you had a client called Chris Johnson, legal name, you could search in here and you would be able to know that with absolute 100% certainty that your client is not on any sanctions watch list with regards to OFAC sanctions in the US. They may be on other lists potentially with Europe or all other sanctions programs, but in general, if they're not on a US list, well then they're fine. So that's how you do sanctions with regards to KYC for alternative investments. Okay, so you always have an AML KYC questionnaire whenever you have a subscription. It's nothing really special. It's just a whole little range of various AML KYC things that you fill out usually doing a KYC customer due diligence profile and other sort of type things, but it's just a few sort of more small things put together that just checks a couple things. So if you've done KYC, you'll know what this is, but you'll just have a name and identification number that includes individual or corporate, etc. Citizenship of the controlling person or the individual, depending on your structure, with the ID type, so passport or driver's license, and then the number, whether it be passport number or driver's license associated with that. Then you just have an address, and then you have the source of funds and the source of wealth. Now, this is pretty straightforward for a lot of alternative investment clients. It's not that big of a deal in many respects. You do have to obviously do a full source of funds and a source of wealth, but now going forward, watch this space a bit watch this space a bit more, because this whole way in which source of funds is reported and source of wealth is being reported is going to change drastically in the next few years. Anyway, that's another story. But source of funds, if you're just a high net worth individual, your source of funds is only like a small paragraph. It will say something along the lines of client has been working as an investment advisor for this amount of time, has accrued investments in this, over this amount of time. Client is based in New York, and it's very, very small. Then source of wealth, which is kind of the same thing, but it's done more over a long period of time. So source of funds, you can basically say client is an investment advisor, they receive a salary and various other investments from that investment advisor, and the source of wealth is more the historic way of how they got their money. And many times you just need to be signed off by the client, and that's it. It's very sort of small this level, but over the years that's going to change. You have an occupation, which just means the occupation of the client, and then any pending legal items, meaning like there's usually a question that says like are you currently pending any legal action? And obviously you'd ask the client that, and they would tell you. So that's basically the AML KYC questionnaire. Conclusion. So congratulations for doing this. After this course, you should now be able to do KYC on individuals, trusts, partnerships, and limited liability companies as per private investments such as hedge funds, private equity, etc. I really hope this is useful and you get great use out of this course. I know you will, because of the uniqueness of the skills that I'm teaching and how much these skills cost in more professional sort of course settings. But I thank you for doing this. And if you really, really liked it, please leave a good review on Udemy. It helps my brand, of course, and more or less just makes me know that I did a good job, and sort of gives me the passion to keep going with this. So thank you.